Now, I think people, like one thing that I always remind people, I said this to a lady last night who DM'd me, who said, all right, I'm ready to get into Bitcoin now. We're at 90,000, I'm going in. I said, all right, just promise me two things. One, that you'll read the Bitcoin standard so you know what it is you're buying. And two, do not sell in under 4 years, because there's no Bitcoiners in the world that have held for 4 years and lost money. It's almost statistically impossible to do. Historically, nobody's ever done that. So you've just got to hold. And when I was in Dubai with Bish, after that dinner, the next day I bought off Stormrake. I think I paid 100, and we did two buys, right, on your advice. I rang you. I said, Bish, I think it was a couple of $100,000 I had, and I said, what do you think what I should do? He said, let's hedge your bets. Buy half now, and then let's wait for the announcements that are coming out tomorrow and see where it goes, and then we can buy the other half. And I think I bought some at 112, 110, or 19 or something.
Yep.
And then this week I bought more at 91 or 92 or something like that.
Yep.
Because Bitcoiners get rewarded for understanding, and this is where that conviction comes. And I posted my last buy on Instagram, which I hate doing, but I did it in the bare numbers to show people, hey, I'm not just talking about buying when it's down. I am buying when it's down. And this comes from years and years and years of being in Bitcoin. And every single time looking back and going, oh my God, why didn't I buy when it pulled back? Because it's so unnatural to buy something when people are running for the exits. But that's actually why there's so few wealthy people.
Correct.
It's that low time preference. So I want to talk about something that Jordi Visser brought up this last couple of weeks. That post that he put up really caught very quickly on fire as a narrative for Bitcoiners globally. I'll just sort of fill in the broad strokes for the listeners, and I'd love to get your take on it. So basically, Jordi Visser is a highly respected investor, and he basically said, in his view, what we're seeing here is Bitcoin's IPO moment. And what he means by that is he's comparing Bitcoin to a startup company going public. So let's say Facebook. Facebook grinds away for 10, 15 years. There's all these early investors. So there could be early investors, literally, who invested in Facebook before it was a public stock, who were backing it before they knew it was going to be Facebook. Family, friends, those types of things. And then you had employees and all these stakeholders that waited 10 or 15 years until the company went public. And all of a sudden, in that moment, when a company lists, those long-term stakeholders now have not only the opportunity to sell, but the demand for the stock that they can sell and get out of the asset. And they get rewarded for that 15-year journey. And they've created fabulous wealth when something is successful. And I think what people need to remember is that Bitcoin came from being 1 cent, and now it's 100,000 US dollars, give or take 10,000 on either side, let's say. That validates, in my opinion, it's been around 16 years, 17 years or whatever. It's successful. It's not going away. And now with the institutional bid or the institutional buyers coming in, now there's the demand for the asset at scale, as we saw last month when somebody sold $9 billion of their Bitcoin in one day. And at the end of the day, the price of Bitcoin was actually up. So what do you think of Jordi's view that, hey guys, it is completely natural that, Dan Tapiero said it, and he said it prior to the 100,000 being hit. He said, I think we'll hit 100, and then I think we're going to just shop there for a while, because I think there's going to be a lot of early investors exiting at this psychological milestone. But the great thing about Bitcoin is it's a fixed supply. So when these whales or these big chunky holders do stop selling, and they will at some point because it's limited, it's not good, that they've only got so much. When that stops, that epic amount of selling is gone, and the only place to get it then is from the people who entered in that new market structure. So what's your take on all that?
Yeah, the Bitcoin IPO article really lit us up here on the desk. We were reading it and we discussed it quite extensively, and we like the facts are shown and proven on chain that there's been about 400,000 Bitcoin that has moved over the last little while, over the last 3 months. and a lot of it from what is considered long-term holders, right? So there's been a massive rotation going from long-term holders who have been, early investors into Bitcoin when it was just a speculative asset, a niche internet currency that was discussed in some internet forums. Now it's a global macro asset powerhouse, right? And it's just, whether you want to go down the Sailor approach of calling it digital capital, or you want to analogous to gold, or you want to just call it pristine collateral, whatever you want to call it, right? Bitcoin is here to stay, and it has so much demand. We've seen the Czech National Bank go out and buy $1 billion worth of Bitcoin, right, as a test purchase. I think it was the Luxembourg or Lithuania, I think it was Luxembourg Sovereign Wealth Fund has come out and bought Bitcoin ETFs. Harvard, the endowment fund for Harvard, IBIT is one of its largest holdings. Bitcoin is one of its largest holdings. There's just so much institutional demand from hedge funds, from really smart capital allocators, that these legacy guys can actually exit and not, completely crash the market. What we're seeing right now in terms of the market price dropping was what we were talking before, which was a liquidity contraction that started in Japan. But in terms of the selling above 100K, that kind of capped the upside potential when Bitcoin was running to 126 at the start of October. I would say that this is excellent, really healthy stuff. You want to see distribution of coins. You don't want your holder base to be concentrated amongst a few large wallets. Now, granted, with any position or with any asset, there'll always be single large holders. For example, in gold, China, the US, and central banks around the world are some of the largest holders of gold. The Gulf nations are the largest producers of oil. They can control. OPEC literally is a cartel that controls the oil price, right? So anybody who's major producer or controller of an asset or commodity can really have a big influence on the price. So what we're seeing now is having this nice big broad distribution of holders, because we got to understand, whilst BlackRock's IBIT may have billions of dollars worth of Bitcoin, it's spread across a lot of investors who are buying IBIT's ETF in their brokerage account. So that distribution of the holder base is fantastic. It just means that we chop around a little bit, but once that distribution is finished, you'll see a lot of people have their new cost base at 90K, 100K, 110K, which sets us up for the next leg up to $1 million per Bitcoin, especially when the liquidity crunch slows down and we get back to accommodative policy stance so that governments can not become insolvent. And then we continue our forward march to becoming a $20 trillion asset class.